Record. All right, cool. Y'all have fun in the chat, man. I love it. Y'all growing as a family, man. I like this, man. Y'all growing together as a family, man. I love it. I love it. Even the guys who go back and forth, it's nothing but it's love, right? Trading is supposed to be a heated sport, right? Right. But like I was saying, this is nothing but simplicity of the point 0.7, 0.618. Now we want to throw in some factors. I'm gonna get to these fibs down here. So let's just adjust some levels, right? We have our high right here, right? And I want to bring your awareness of this closing, this candle closing here and here. Now, when I go to my monthly, which I'm gonna get rid of this fib because I want to explain something. This is the monthly candle, right? We just started off August, right? Now, although we came, this is a weekly, although we came here, basically, right? We took out this low, right? You can see that little wick right there. That's the low it was aiming for, not the wick, right? One or two things may transpire next week. And we wanted to throw both scenarios in. The fact that we didn't close beneath here could send us back up easily. At minimum, right back to this low. Could easily send us back up to this high. Easily. Or if price is ready to run, it could utilize this candle's low right here at 39,820 levels, we might as well say 820 to 850, and yield us down to close beneath this low, right? And I think I mapped that out. So here's the swing right here. This is the inner range, right? Which is why you see this candle went here, closed beneath, well, it didn't close beneath this low, it took out this low, and then it ran up. So if you're looking at your overall range, yes, we are in the sweet spot. Now, one or two things. If this was the actual range that we were using, the range is practically almost dead because we closed beneath it. And that's why I said if price was to come back up, you want to stay close to this level right here, this 0.618. And that'll be kind of where we want to map out, ideally, this zone, which is too much of a window on a weekly, but this 0.618, just as well as it comes into the sweet spot to, support off of, and so, if we selling, which we'll see in gold, we reject off of too, right? And you want to be aware of that. So this high right here, I would keep this in mind, right? I would keep this in mind because this is the area of liquidity. And you see it now, this space doesn't really necessarily mean anything. It's just the fact that you got to give price sometimes you got to give price room to wick, right? You got to give it room to wick, which when we get down to lower time frames, you'll be able to see that. But remember, this isn't the range. This was the range, right? So even if price opens up and comes down and bounces on this, it could still take out this, excuse me, take out this low and still wick at 206, um, come back here, come back here and wick again, and then possibly go up to resist off here. So we just got to see, of course, price play out. Now with this high, you got a low right there, but you got your low right here. So keeping this in mind, if price is really seeking true liquidity, this is the fulfillment of the range. And that looks like a decent level of price to wick to, right? Because it's a 30, 38, 5, 32 level. You know what I'm saying? Pretty decent for us to come to and, catch our normal reversals around those areas. But let's get to the lower time frame so we can see what's going on. So let's get rid of all of this. I'm going to explain all that up there. We just got to study where we at. So right here, we got our low, we got our high. All I'm doing, going here to here, how did price react? We ran through it, which is why that dominant range was right here. Excuse me. It was right here. Was it right here? No, it was right here. Because I said the low was right here. Yeah. So this is the dominant range here to here. And if you need to note that, you just kind of got to find your system of awareness to say, all right, this was that sweet spot for the monthly potential. I think this was the weekly, bro. Let me change that. Weekly. All right, cool. And you see it rejected right off came into about 50% of that opposition, right? And we go up. But the fact that we blasted through this 0.618, I'm only I'm not saying only, but I would like to see just a rejection right around here for another sell opportunity. And you have a Tetris sitting right here too, right? So this area per se is what I would look for. And honestly, it just depends on how this day closes when we open up Sunday and Monday trading day. Because if we form green, this is the thing. We now form a range on the daily to see some potential selling opportunities up here. But if we open up and the daily just kind of comes up here, lures everybody in, and wicks, but we close red, we can see a potential movement down. But if we close green, we can see that potential move up. Because overall, guys, this is a nice pullback. You know, everybody's panicking, um, already talking recession and all these things. This is nothing but a normal. You know, let's just get rid of this. This is nothing but a normal. What is the market full of? What letter? W's. Here, here, here. We either come here, right, or we just continue up. Now, if we come here, we just continue down. We keep making W's until it's time to go up, right? Because if you look at the overall, going here, going here, going here, going here, going here. Because this setup just looks like a modified version of this setup. And then we just kind of make our way up. All right. But if the market's ready to go down, it's okay. It's quarter three. Like I said, we've been bullish for almost 2 quarters and some change. Right. So it's expected to have a retracement. Your only objective is to make sure we're in agreement with that retracement, right? If the market's ready to rebalance, if you may. All right. So, just studying right where price is, not making any impulsive decisions. We're right where we need to be to see if price is ready to close beneath this low. So price on the daily tomorrow, or excuse me, not tomorrow. Well, yeah, technically Sunday, Monday. If price seeks here, right, and we close beneath here tomorrow, we're just gonna wait for a pullback into this area, which is still technically a 0.618, right here, and we will fall down. Right. And if overall we break like a low right here, or let alone this low right here, now we're gonna have our bearish sentiment. Right. We're gonna have our bearish sentiment. All right, but let's get down to the nitty gritty for Let's study some of this stuff because this was precise, right? Easy. This was precise, right? Easy. Because when this happened that day, I think was it Monday or was it this one? I think it was this day. Yeah, price came up here, respected the Tetris, fell on Monday morning. We kind of came up here, same thing, came up here, came once we came up here, this was just a higher time frame. Cause we go from this high, remember, this is your high, this was your low. Right. So all I did was just drag that over so you can see the level workout. Right. Right here, 0.618, 0.7. Then if we go to a lower time frame, which would be the 1 hour, you'll see it even higher where the range necessarily wasn't fulfilled. So by the time this range gets fulfilled, this is where you're seeing prices kind of, it's not even manipulating this point. It's just you haven't done your thorough analysis. All right. Because most people would think these wicks are manipulation, but it's just lower time frame information. Right. Not like 5 minute for me, but a 15-minute analysis for me. Right. So this is kind of how the setup would have worked. So if you would have took 0.7, 0.618, you would have been at like 190. Price came to what? 240. Okay, you got stopped out. All right. But if you would have went to your 1 hour, right? If you'd have went to your 1 hour, I actually modified the Tetris right here, but I think the 15-minute gave me this blue area. So I know it's kind of crunched, but yeah, it's right here. So if I basically move this up right here and right here, right? This is not. Don't ever let nobody tell you it's noise because it's information. It's just what extent are you willing to go to get that information? Now, if you go all the way to the 1 minute, you're gonna find information that I feel that may cause more anxiety than anything. But see, even this is still like right here. That's why I got this point 618.7, right? And then, just carrying it down to we just studying a recap, right? We carried it right there. We could have got that move Thursday right here. Same thing, right? So by by repetition, right? I want you to look at something. This, right? This looks like what? This. So if I was anticipating a sell, right? And this is how the market works, man. It allows you to be like sucked in, thinking like, oh man, I missed the move down. It's all in perspective, man. All right, because we could still potentially come back up in here, right? So being that this information is kind of already sealed and dealt, we can kind of get rid of it now. And if you want to go back and back test it yourself and study it, that's perfectly fine. I would keep that up there. Um, I would keep that up there for some awareness too. But I don't need that. I don't need this. Um, I don't need that. This is done. What you don't want to, if you're taking notes, what you don't want to do is get confused in the intermediate ranges or inner range fibs to where you lose sight of direction. And that's why I said the lower you go down, you're getting further away from direction, right? So, having those dominant fibs with the daily and the 4 hour, for real, the weekly and the daily, you can kind of monitor your inner ranges more better, right? And that's going to come from your daily ranges based on the time frame you selected. So if you selected a 4 hour time frame within that day, study just the 4 hour increments. If you select the 1 hour time frame, study it by the hour within that day, if that makes sense. Drop some files in the chat that makes sense. So you can study your daily range amongst these time frames so you can kind of get, okay, what range is being provided. Because, Sunday and Monday is going to provide you with the range, ideally, what the outlook of the week is going to look like, right? And we study that with Nas. Like sometimes we don't have to position ourselves until like Monday, New York, or Tuesday because we gotta wait to see what range is the market willing to give us, right? And that correlates to saying who's gonna make the first move. The market is this right here. So even in real time, if you see that price rejected right here, that just simply means a fair value gap, but also a range on a lower time frame at possibly a 5 minute. That price came from this high to this low and went right here. And I can show you that by example because that's here and there, right? Where the price come to. I'm saying, oh, excuse me. Even if you went right there, even if you want to go right there, I'm saying you came to the 0.5, but I'm like, I'm believing that's the high right here because the swing is right here. You can still use the same theory, right? But you got to understand your time frames though. And that takes practice. Now, my thing is, my thing is, if you are using the lower time frames, right? All you're doing is you're going to study, okay, if this was the 5 minute, how is Ty able to see that without going to the 5 minute? This is your high. This is where the market swung from. So the moment you see this present itself, right, you got 15 minutes to kind of say, okay, there's a high right there if I draw a swing, but okay, I'm gonna use this high, right? Because this is 3 5 minute candles, 3 5 minute candles, 3 5 minute candles, 3 5 minute candles. So that means some type of range to cause this reaction happen on a lower time frame. But you can use simple knowledge to say, yo, that's a high right there. That's a run on buy side. Boom, we get out the way, right? And then if you scaling down and if you miss that range right there, you just go from this high to this low, come to a 0.5. That's not what you were looking for, right? You're looking for a 0.7 if you really trading the same way every time. But by the time you get here, you realize if this was your swing, or even if you use that, your price is exceeded. So now this is where the confusion happens because some people are like, oh, okay, now we're on to the upside. No, you're still low on your time frame. So by the time you do all of that, you know what I'm saying? Like you thinking like, all right, sweet spot. Look, it does. And this what confuses everybody, right? All right, we supporting out the 0.618 side. This must be it. But you got to think, yo, look where you at in the market. You still are in median of this. This is the sell side. So what sell side have you ran right here? You haven't ran a sell side. Remember, you always got to point out your significant highs and lows. That's now this is a significant high and low of this range, right? But I'm not looking. If my bias already told me we running, yo, I'm looking for sales, like point blank, period. So that means once this happened, okay, I got my high, I got my low. All right, that's what I was looking for. Because think about it, from here to here, this is an hour range, right? From here to here, right? I don't have to go to the hour to recognize that. It's right there, right? And then of course I would turn this orange. Boom, I get out of it. All right, great. Let's just say I don't get that. All right, cool. Now I still been presented on a 15 with an understanding of a high and a low because we swung right here. All right, I don't get my 0.618 right here. All right, so I got to keep it moving, right? All right, I got a high, I got a low right here. Do I get it here? Yeah, I do. It's just patience to see it through. So there's a high, there's a low. We swing up. Look what we sitting at. So even if you went here, right, and here, this was your last opportunity, pretty sure. But by that time, you thinking like, oh man, I'm gonna probably get stopped out. You probably did because your high is right here. You want to set your stop loss right there. So if you come in at 236, your stop loss got to read, well, that's not even bad, 280. You know what I'm saying? Stretch it out. You know what I'm saying? 50 pips, 30, 50 pips max. And you just sit there. You're not worrying about all of this. If it comes and gets you, it comes and gets you. All right? Because did we close above? We didn't close above this high. All right? We wicked above it. If you in my mentorship, you know it, right? We didn't close above this high. That's intentional, right? For people to be like, oh, we on the other side. This candle bamboozled everybody, just like this one did, right? So then, boom, you get knocked out. Well, honestly, buyers get knocked out. You go here. You got it, bro. Like it's just more so trusting yourself from here to here. So don't think you can't get sniper entries. The question is, are you willing to wait for them? Right? Because I mean, it's this happened. This range took happen at what Asian session? That's weird. U30 Asian session, right? And then London, what? London rose. Well, excuse me, still Asian right here. So you in Asian, you could have been good. So London came, you know what I'm saying? Well, still Asian, right? We come here, another what? Break of structure, high, low, bib it out, right? Bib it out. And by that time, bro, like look at all the dangers you escape in New York with no pressure. Like everybody, pulling up their live streams and like this is what the market's gonna do. And by the time New York get here, you like what for what? You know what I'm saying? Like I got an entry right there. I got an entry right here. I got a high. I got another low. Right? I got another low. My bad. We're gonna be done with this too after this. We're gonna go. I'm just showing y'all. Oh shoot. I'm just showing y'all how to engage once you find your direction. So we got this high, we got this low. You know what I'm saying? Even this right here shouldn't scare you. Right. So let's say right here, you enter right here, right? This is where I feel like some people kind of panic. Right now, let's say you took your profits right here, you up and during London. All right, but you went to sleep, you fell asleep, you woke up again, it's 5 o'clock. You like, dang, yo. But where's your stop loss? 168. You entered at 128. That sound about reasonable. Put it at 80. You know what I'm saying? Like just put it at 80, win, lose, or draw. Because by the time we get here, even if you get wicked out, you gotta accept it. Like, yo, I took the loss. Even if this wick stretched all the way up here and took you out, you shouldn't be mad, right? You gotta say, okay, maybe my risk I should have went right here. Shoulda, coulda, woulda. Never happened, so you'll never know. But you do got a Tetris right here too, which price came right dead smack in that, right? But we already clarified the 0.67, 0.618, point 0.7. Right, but you come here, This ain't nothing but 8:30 fake out. Or this was Friday. That's crazy. This was NFP. This was NFP, yo. I'm no longer believing news to be a factor of anything without precision. Even with GJ, I was upset because I told my crew trader chat, I was like, yo, I said, had we just went to the 1 hour, CPI, I mean, NFP literally came to the market did the same move with the pairs we trade. In gold too, you'll see it too. But that's, yo, you can't make that up. So if your position was already held right here, you ain't even got to tighten your stop loss. You just saying, yo, maybe I'll just use this high. And you get me, you get me. Or if I want to, cut my losses short, I'll use this high. I enter right here at 125. I'll take a 20 pip loss. You know what I'm saying? It could be $20, $200, $2,000 with a 0.01. You know what I'm saying? So it's like you gotta ask yourself, why would you panic? Because by the time I got here and we broke here, all right, cool. I'm testing CPI. Ty, you put me on game with something crazy, bro. That was that low. All right, bet. I'm back in because what did NFP do? It came right back up, and everybody like, yeah. Look, never put your high right by the bodies because that's the true liquidity. You see, they took out the liquidity right there. So if you took this sell again for another entry, look at the equity you have though. You got the equity from here to here. All right. So you could position yourself if you wanted to. Um, you know what? My stop loss will sit right here now, opposed to where we were. We was up here at 170. I can just bring my stop loss right here, break even. You know what I'm saying? This way if the market goes up, win, lose, or draw. Some people are even afraid to have a draw situation happen. Now, you're only afraid to take a draw situation because you didn't take your profit down here. So once you seen price come up and right, like, oh my God, now I'm gonna just take off my profit, and then boom, comes down, never returns. Here we are, another range provided, right? Boom. So that means coming into um Sunday's price action, this is where we're looking at 804 to 850. Win, lose, or draw, that's a stretch. That's 200 pips, right? So you just scale up to see if that makes sense. All right, there's a high, there's a low, right? So I think that's the same high and low we went with, right? Yeah, it is. So right here would be where I would intend, and I would put a safety net stop loss right there. That's still kind of a stretch. That's 850 to 9. That's 100 pips. It's kind of where I would be at. So my thing is, if price rejects off of here, supports off of this 382, and we get up here, we could see a potential run up to fulfill this lapse, right? And that's the hard part because you don't know, and it's good we don't know. But we know that we sitting in a sweet spot of a freaking weekly time frame. And if you're using fair value gap knowledge, you're sitting right in here, right? So by that point, you can't ignore like, yo, if I'm using now trying to sell, this is where they get me because I technically ran sell side already, right? I technically ran sell side. That this is nothing but a here situation, here, let's get back here, and then maybe sell off. So we could look for buys if we see the seeking of what? I now have a range with this. Well, technically, we went to here, right? Sweet spot. Move it on up, break a structure, right? We failed to break structure. Now I got my high and I got my low because we closed red right here. So if I'm waiting for anything, I just want to wait here. I want to wait to see if price is going to fulfill here if I'm buying, right? Nothing overthought. And I got to expect some wick game right here for this low, right? So if I'm giving a signal, right, it's going to be 461. I say to about 520. Or if you want to go with the low, I would go with the mid, about 520. And then I would aim to at least, what's this right here? That's 450. I would just take the risk of just putting it under 412 if we come down here and wick. Thing is, you could get down here and wick and close in here. Now, if you get a closing on your hour in here, right? Or if you wick in here, we don't even come down here. That's the failure to break structure. We consider continuation up, and you know your targets, right? You know your target is somewhere between here. I would map it out so I wouldn't have to guess it. You know, I would go ahead and say, yo, overall TP for the week for my range, it would just sit here. If price is truly ready to come up, but I got to keep this in mind, right? So this would be my TP1. If we close above this high, I'm bringing my stop loss to about 300 pips from 400, maybe, yeah, it's about 300 pips. And then I'm letting this thing ride. And this would be my overall TP, win, lose, or draw. One of my students like Ty want to be able to catch one of those swing moves. This is a swing move, yo. You catching 39.6 or 39.5 potentially to 40. That's 1,000. 40, even if you come here, shoot, that's 1,000 pips right there. With a .01, that's $1,000, right? With a .1, that's $10,000. With a 1.0, that's yeah. Do the math. All right, so yeah, that's U30, man. So it's recorded. So if you need to go back in and kind of catch what you need to catch, let's move along. Let's go to NASDAQ. All right, let's see what we're working with. Because nothing's changed. Nothing's changed. Spot on the sweet spot, right? I haven't changed these markups. I haven't changed these markups. Everybody was anticipating here. This where we were. We missed this on a daily because I didn't switch over because we was on gold, right? This is precise on a daily. Like I can't make that up. And this is a point. Every zone you see now is not a Tetris. It's not an opposition. It's literally a 0.618, point 0.7, right? Um, that's just where I'm tailoring my style to now, and you get it for free, right? So, but I mean, my mentorship, we get more in detail. But even if you just take this and run with it, you can be profitable just using that, right? What happens is you become not profitable because you don't trust it. I trust it now, right? Whether it's a short TP win or a short loss, I trust it. It's just you have to withstand bigger zones with a lighter risk. So if we're here, right, at 271, I'm anticipating this low potentially to get knocked out, right? That's my, it's just we closed in here. So we could get a small rejection up and reject off this 618 and continue down, right? Potentially fair value gap right here, right? Always want to leave room for potential because even amongst this low and this high, right? You see where I got this mapped out, right? Right? We still have potential to come to 17.5, which I mentioned that in my chat. So 17.5 ideally could be wick gain, right? Could be massive wick gain to potentially come back up here. So allowing to see if Nas even drops right now. So you anticipating a sell, like that's cool, but it's like, all right, you want to be careful because we close beneath this low, so that's a break of structure, right? That's a break of structure right there. So I'm notifying that right here, right? And by that time, it's like, I can get rid of my fib and get more clarity of where I'm at in my time zone. Oh, that's the daily too, my bad. So we went to the weekly. But even from, I think I did draw it out from here to here. Yeah, somewhere in here. 17.5, I would say 550 for real, to about 17,737. We could potentially see that on a weekly time frame. I would go ahead and map that out too. Right? Because by the time you give price literally a fulfillment from this low to this high to fulfill the entire range. So I would honestly say our better bid may come from this area, yo. So if you're a Nas trader, even if you got to take a few days off until this transpires, if it transpires, I will wait. And I say that because look, we closed beneath this low, right? So anticipating a run right back to that low at 18,535, drop right in here. Possible liquidity grab right there. But I think some wick gain could happen in here on a weekly time frame. Cause this ain't nothing but, you know, who remember the flow? I went over it. Who remember the flow? How many pips is this? 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 10 up, 6 down, 10 up, 6 down, potentially to this Tetris, right? Because we got three bearish candles. There's no way you can't say that, all right, price is really ready to fulfill. Now, we took out this low. That's a run on sell side. So anticipating a run back up, if that's going to be my low, I'm just mapping out, save myself some time. I'm moving right here. Wick gain probably 20.026, but 19.806. Now, this is whichever one presents itself first, right? That means that if this market comes up and just runs down, perfect. By the time price gets up here, I'm not looking to sell. I'm now looking for a rate above. Because if you catch this down here, that's what I'm saying, that's 3,000 pips. You know what I'm saying? Perspective. What is that perspective? It's a 0.01, that's 3,000. A point 0.1, that's 30,000. A 1.0, that's 300,000. Right? And this could pay you for the rest of the year, especially with a point 0.1, and you hold it. You ain't even got to add positions. You just carry yourself, withstand some of this gunk that's gonna happen, like situations like this, and you reposition yourself based on you using your fib. Like, you'll be all right. You know what I'm saying? So I would leave that there and kind of just see what price plays out. So we go to our daily. So now we have a high, we have a potential low right here. Because this is the thing, you got to say potential low because we didn't get a green candle. Well, my candles, of course, standard now, right? I'm not tied to the market anymore, so I'm not color coding my charts. I'm detaching myself from that. All right, so now if I don't get a green candle here, or if I get a green candle with this day, that's perfect. I now can say I have a potential range, right? I have a potential range. We could see price open up and possibly reject here, right? But if we go above here, then come support off of here, we have a change of structure, right? That means this Tetris right here situation is now going to be ideally support for me because we come above this low and sit on it. Now you got to recognize that on a lower time frame though, because that's why your daily sometimes may blast through situations like that and you can't recognize it. So what I mean by that is on your lower time frame, if you start to see this on a 4 hour, even a 1 hour, that's change of structure. But on the daily, it's just gonna be one candle, right? So it all sit on one day, but on the lower time frame, you get to catch it if you get a support right around like 18.9. Oh, my fault, my fault. Yeah, 18.5. That's eight, my fault. That's what price goes. 18.531. That's kind of like 18.550, 520 to 550, and you ride the thing up. But that's only when you start to see support right here, right? So let's go to our 4 hour. Boom, we got our range, right? We got our range with this. All right, so we got our range. We got our high, we got our low, right? That's simple. And look, we close in a daily like a daily sweet spot. So now you got your range. So that's simple. Like, you come up here, map it out, and carry on. Like, you don't have to make it any more difficult than it has to be on your analysis. This is why I'm teaching now outside of a live market. You guys basically get a taste of the mentorship because normally I used to get my lives when the price was moving. You weren't able to study like that or, have a day of preparation, right? Because this still is the same as a Sunday, right? Until 5:30 when GJ opens 6 o'clock with indices and metal open. So boom, I'm mapping that out. Going here. I ain't got to do no extra work, right? I think this was a normal sweet spot right here, right? We talked about 900, and I was telling the chat, I said, yo, we need a closing in this area to solidify if we going back up. It was invalid. I get rid of it. I don't overthink it. I get rid of this so I don't have to overthink it. I get rid of this so I don't have to overthink it. You know what I'm saying? I get rid of this. I don't have to overthink it. I want to keep this area and this area because this is my range, right? So this at some point was ideally a sweet spot, and I'm thinking it was right here, or probably right here on the daily. Yep. So this was a daily range right here and right here. Look, we set right on it, bro. That's crazy. I mean, precisely. And then you see this low right here. Look where this wick happened. 10 o'clock drop, right? 10 o'clock drop. right? So, recognizing situations like that, yo, take your fib off, be about your business. And you see, I don't have to leave a fib on to like confuse myself and how I'm gonna get rid of this because it's getting aggravating at this point. All right. Because I know the flow now. It's 10,006, 10,6, 10,6. So we ready to go down. We ready to go down. Thing is, with this 4 hour candle, we didn't close above here, right? In Nas. So I'm looking for this next 4 hour candle. If we get a closing above this void, potential run up in here, right? But by the time price gets up here, I still gotta do some work. Where's my 1 hour range? My 1 hour range is from here to here. That's why I had that red zone at. So now I got this high and this low. All right, cool. I want to recognize that because this could be where price wicks up above that, right? Boom. Turn it red. Nothing else left for me to do here. Nothing else. Right now I can study down here, but these are my areas of focus right now. If price was to come up. So that means once price breaks above, which we just talked about right here, I'm looking for buys to carry up to either here or here. This will be about TP. What's that? 18.3. This will be about TP. This will be second wave of TPs, honestly. Because by the time you get up here, you up 700 pips. Right? We normally range our phase ones to about 200 pips. Once you get to phase two, we thinking about 500 pips. And then phase three is definitely swing. You should be holding for a few days. All right. Right. So we got a high right there and a low right here. I'm just thinking that's probably the higher time frame where this is kind of the median of the entire range. But if you just stay focused on the bigger range, you don't fall victim to situations like this because you do have a high and a low right here, right? But we fail to close beneath this low. So what does that mean? All right. On the hour, I could be potentially sitting to buy up into those zones, right? Because you see, where did we come to on the 1 hour? Boom, right here. So that means if price kind of suckers down and gets here, you leave room for potential wick action to take out the sell side, not the wick, but you could get a wick come down here to 310 potentially, right? And then close right back up in here. But if price comes back down here between like 320 and 350, oh, I'm in. I'm in. Stop loss may sit around like 280. Let's call it a spade. 280. That puts me below this wick. And if they come and get me, they come and get me. All right. And my bad. Let's get more precise. Because by this time, yeah, we can use levels, but what would it look like if you had a precise zone of price? Right? You could just say, yo, 45 to 66. That's where I'm at. Win, lose, or draw. Because we already came in here. But see, this high fell in a break. This high, we haven't broke structure yet. Because even from this high to this low, right? Where are we at? All right. So this is the game that you play when you scale down. Sweet spot, sweet spot. Who gonna break who? Because this is another catch. We break above here, we come here, out of here, right? We can break here, right? We can break these lows, take out that low, come here, take out that low, come here, come back, come here, right? That's a scenario. Or we could say, I don't know what y'all was thinking. We could come here, here. Let's continue. But you have reference now. My thing is we can still come here, right? And still come here, then do that. It's all on letting the market play out. So if the market opens up at 6, right? You see when you see this market open, whether it gaps or not, if it gaps the way down here, it's got some more digging to do. But the moment you see it may gap down here and just wick right under here, that's when you want to see price kind of close up in this same area because this is the range. So if you mapping out your high, you mapping out your low, those are your forms of liquidity. We have not ran buy side yet at 480. We have not ran sell side yet at 310. Allow price to do one of the two. Now we could wick up here and then go down, or we could wick above, support off here and go up, because this is the high that's eye candy right now. Because if you look at the range, where are we at? High, low. This is the dominant range of the sweet spot that we're sitting in, right? So already you're working with buy side, buy side, buy side, buy side, buy side. So what do you think the most dominant liquidity is right now? It's to the buy side, yes. But at the contrary, if this is our true failure in a break of structure, we want to see if price is gonna stay above this low. And that's Nas, yo. Like nothing more, nothing less. You get down to the 15 if you need to. But look where you're sitting at, weekly and daily zones, right? So you still have potential to come even down here, right? You have potential to come down here, right? And you just you don't have to study this, but you fail to break structure right here. All right, you take this low, you take that high, right? Take this low, take that high, boom, got it. Where do we come to? You can do the sweet spot right here if you want to, but if price comes down within your you could use 343 all the way down to potential 393, right? Because where are we sitting at? On the equilibrium. This is the part that kills everybody, right? Because we've been taught use the 0.5, use the 0.5. But if I've shown you verbatim repetitive action right now with the 0.6 on 8.7, which everybody has had this knowledge from the candlestick Bible, right? From the candlestick Bible. Everybody's had this knowledge. Everybody ignored it. I actually went back to the roots, not of the candlestick Bible, but of the fib. And I'm like, yo, wait a minute, bro. It's there's more science to this and simplicity. I don't trade another way now. Now, my thing is, I'm not deviating from the pillars I taught y'all, but I don't have to have them marked up on my charts anymore. I have awareness now. My thing is, where's my range at? Once I've identified my high and my low, I want to know where my range is at. Because I still, at the end of the day, afternoon session, I could have called a short here, could have called a buy here, right? And then could have been out. So from here, 515, that's 200, almost 200 pips, $200. If I use a 0.01, all right, cool. I'm out. I'm buying here. Cool. Go to 450. That's another 100. That's $300 move if I was scalping the 15 minute, because I had my ranges identified. Because once I realized we failed to break structure here, I'm not looking to like buy this break of structure, right? I'm looking to, okay, cool. Here's my high. Here's my low. All right. If I'm anticipating a sell, that's the high. That's the low. Boom. I'm selling when price get here. Win, lose, or draw. Boom. Set my stop loss above this high. Great. All right, cool. That's a distance, but why not? You know what I'm saying? Like if I'm really testing the theory, right? If I want to get knocked out, I'll go to 562. Okay, great. If I want to just play it even tight, I'll go right above the 0.7. Right? I wouldn't do that, but to each his own. But boom, I sell it here. All right, great. I gotta realize, wait, there's a low, and that red candle closed. There's a high. All right, great. I gotta respect. I have to respect the range because we didn't blast through that. So then I got a low, I got a high. All right, cool. I'm buying when price gets here. All right, I got a little bit of drawdown right here. So I bought, let's say I bought 350. Ty talks about the 50 level all the time. So I bought 350. Boom, I was on the hour. Actually, I bought 346. All right, cool. It came to 326. All right, my stop loss going to sit right beneath this low, 315. I'm cool with that. I'm in range. I'm in flow, but I'm getting out based on this situation right here that I found on the 1 hour. Right. So boom, I bought 346, 347. I'm out at 447. It's already there. It's already Friday. Market about to close. I want to take my 300 and go. And that's how you play the scalp game for my scalpers out there. But you can scalp the 15 minute. Most people just think scalping is 1 minute, 2 minute, 3 minute, 4 minute, 5 minute. This is scalping to me. right? Because you're scalping yourself into closing number one, but you can read the range based off of where you're trying to go. You know what I'm saying? Because even with this high and this low, we closed here. All right, you just got wicked out. We closed there. It's right there. Right? You just got wicked out. But price closed here. So if you even sold 18,557, you got knocked out at our normal 820. Take it, chunk it on the head. You're not gonna get them all. So boom, your opportunity presented itself again. All right, I'm going back in here. Now my stop loss gonna sit right here. If I get knocked out, that's two. I'm done. Boom, I got 200 back. So if you sold here, right? Let's just say you caught 550. You got stopped out at 25. So that's what, 50, $75, right? Or 750 or 7,000. 7,500. But let's just say you only took a 0.01. It's Friday. You going light, right? And it's NFP. Number one, you wouldn't have been trying to sell. I mean, you wouldn't have been trying to buy anything anyway, but you got knocked out right here. All right, bet. They presented a range again. You like, you know what? I lost 75. Let me go back in. All right, boom. I caught my 100. Or that's 200 almost. 150. Boom, I got double back. All right, cool. I'm willing to risk half of that. All right, cool. So I'm buying here, got my 100 back. So I was willing to. I took a loss at $75, and then I won 150 plus 100. You know what I'm saying? 250. I got my money back. You know what I'm saying? Like, but I didn't revenge trade to get it. I didn't try to. All right, let me buy it here. All right, we're going back up. We're going back up. Oh man, I'm gonna lose my profits. Let me go ahead and just take this. Now you only up. You know what I'm saying? $50, and now you don't know what to do. So now you're trying to buy. Now you're trying to sell. Now you're trying to buy. Now you're trying to sell. And then you struck. You know what I'm saying? Don't get caught in that flow. All right, cool. So last but not least, gold. Let's talk about it. All right. Look how beautiful this price action is, bro. Like this is the crazy thing. Let's go. Let's talk about it. Not bad. So where do we close at number one? This is a daily 6.8, and this is a weekly. Yeah. So I already had it mapped out for you guys. Let's get rid of this. High, low. Look where we closed at. Now the wick took out that high, right? So on a lower time frame, more work needed to be done. Now we caught, if I'm not mistaken, chat. What do we catch? First of all, let's look at the candle, right? This is clearly our range right now. Look where price closed at. Same perspective as if you were on a 4 hour and a 1 hour. If you took 44 on a weekly, right? Your stop loss is another 400 pips. Right? Right? That's why with the daily, we went from 24.45 to 24.58, right? That was a signal. Our stop loss was 24.68, if I'm not mistaken, from our crew trader chat. Now, most people are like, oh, y'all got stopped out. We actually didn't. Like, we actually did. We actually won the trade twice. So we won like 200 pips twice, right? Because it never broke our stop loss. So but yet, NFP took us out. If somebody still held, that trade was been dead by 68. I stopped out, right? So my thing is, if this is our range, right, we could see a potential grace of a hair opening up to 22.44, 22.45, even wick up right here in this daily once we get down to it at 24.53 and potentially drop. Now, we closed beneath here. That's my sign. Of course, everybody's ringing the bells at 2,500. If we get it, that's beautiful because this price could run up, wick here, and then decide to come here. It's the principle of look where this candle closed at. If we would have closed above here or even above here, let's go ahead and bang it out. But I would be sketchy in saying that we're ready to go there just yet. Because if I'm not mistaken, gold was the only candle that, as far as weekly, what we trade ended up closing bullish. But look at the month, still bearish, right? So we make room to go down. We make room to go down. Number one, we have a well, we don't have it yet, but we can still go down. But price running down first, we might as well say this may be the high that it's aiming for before it makes its move. And gold has just been running. Like, let's just admit. But I always want to keep in mind that's why I have these ranges right here. Right? I think this is probably the weekly if I went there. Yeah. That's where those levels coming from. So if I'm look honestly, we could come down to here, 24.43 to 24.56. And if we using our highs and our lows, right? It's this swing, well technically this swing and this swing, right? We could potentially come down here too at 22.23 to 22.40, which ideally I'm thinking 22.50. You know what I'm saying? But that's neither here nor there right now. I want to see what price is gonna do amongst this. This is where my focus is right now. So I can get rid of a lot of this. This was the build up, right? We're not here yet. We're not here anymore. And this is just cleanup. Like after every 2 weeks, I kind of clean up my charts and then just keep the levels, the main levels, presenting themselves. What was that? What did I just delete? Oh yeah, I don't need that. Well, yeah, I technically do. You don't need that. I'll draw it out again. But I want to go show you something. All right, it's cool. So us closing beneath this low, we got a reaction right there. The thing is, we can still go up because we didn't close beneath this low amongst this range. So my thing is, what have I presented myself with though? You might as well say this is the high, the low, and this is the high, right? So potentially we could see gold on a daily, run it on down here, right? That's gonna leave me at 23.85 to 23.94, which we could potentially see another situation like this before we go up, right? But I would still consider this low at 23.64, right? For potential wick gain. That puts us right under 50 to potentially go back up to 2400 because this could be our consolidated moment, right? The same situation here. A lot of that happens, right? It could be the same situation here. A lot of this needs to happen before 2500 appears. But you keep in mind, this was your daily 0.618.7 that we closed in. And then we got the weekly, right? So let's go down to the 4 hour. Boom. All right, let's get rid of our fib. Bring this in. Bring this in right. Hold on 1 second, guys. I called the whole buy from 2397 and 23400. Nice, bro. Yeah, 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 yeah. Shout out to Osman. I'm just not reading the comments. My bad. All right, so cool. All right, bet. So looking at this situation, let me get rid of a lot of this stuff, bro. This is 15 minutes. This is what I mean by like lower time frame. But I was doing back testing. Look how precise that is on a 15-minute time frame. That's crazy. When you start to do stuff like that, you'll be patient a little bit more, right? All right, so cool. Let's get rid of that. So we close beneath this low. All right. Break a structure. Break a structure there too. Break a structure here too. Break a structure here too. So simple. Don't need to overthink it. There's my high. There's my low. Where's my sweet spot? Kind of a wide range. Right? Right there. Here. 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 Get rid of it. There's my high. Potential weight gain at 24.69. And I'm cool with that. Let's get rid of this stuff. Let's get rid of this. I'm just getting rid of the main zones. All right, cool. And that's it, bro. So potential sell from 24.52 to 24.57, right? And I gotta leave a 200 pip gap, unfortunately. All right, so because we got a Tetris right here too, right? So I just narrowed down my time frame. All right. Boom, I broke structure right there. Same scenario, unfortunately. Right? Tetris scenario happening right here too. Right? So I'll bring this a little closer. Right? And you can just see prices. This is where we caught our sell. And during Asian, price came up here. We caught that 58 down to 30. Price took out that high, but price never came to 68. We took that. By that time, these were the two sells we caught. Now, when price came down here, um, that's a potential, just taking out on that sell side. But time price came up here. All right, we knocked out if you held. But then you see price kind of coming here and coming here. I'm gonna show you how we could have caught NFP. One or two situations on the hour. All right, so cool. What time is this? London high, right here, right? 8 o'clock. We run up. There's our high. There's our low. This is 8:30 to 9. Fib game. It's gonna make sense on a 15-minute time frame. 1 hour. 1 hour. Here. Here. You see where price closed at? You see where price wicked at? That's what I mean by if you start to recognize the bodies as your 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 emphasis of liquidity, you can go here comfortably with a stop loss, right? Because once price came down here, everybody thought they missed it. Price came back up, opened up at 10, hit them again. Let's rock. All right. So we go to the 15, right? Here you go, right here. High, low, you right in there. Your stop loss could have sat right here. You entered at 71, win, lose, or draw, bro. If I would have just went back to gold, because we were trading what GJ at that time, right? Even if I went here. Because the thing is, on your 15, you have time to see it populate. Thing is, you allow the volatility to lure you from what you need to see. Now on a lower time frame, I'm guaranteeing you this is sitting in a 0.618, 0.7 on a lower time frame. But if I even just go to the left real fast, number one, here's a high, right? Y'all know where I'm going at with this, right? Here's my high. Here's my low. Price never did what? Came to the 0.618, okay? Let's just drag it over first, so. Let's just drag it over. And make sure I keep my flow. All right, so I think it's this low right here. Yo, y'all see that, right? The 15-minute is dangerous, man. Boom. Now let's look. Let's drag it over so we don't say tie. You know what I'm saying? Capping. All right, so where's that low at? Oh no, 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 my bad. It's right here. Yeah, yeah, yeah. It's right here. Yeah, all right. I got it. right there, and there's my high, and we see that, right? That's a missed analysis on my end, right? Now I want you to see when this happened though. July 17th, August 2nd, bro. Entry, entry, gone. I mean, you could have took out profit right here. You could have really took out profit once this candle opened. So 24.25, you could have said, shit, I'm gonna go from 24.80 to 24.20. 600 pips, but you do the math, that's 600 there, and then you catch there, that's 500. That's 1100 pips. I'm saying you said if you even set a point, if you set a 1.0 with that, you gotta understand that's thousands. So that's 8,000, and then that's 5,000. Excuse me, my fault. That's 6,000 and that's 5,000. It would have been 11,000 point move right there, and you would have been done. You know what I'm saying? That was the overall catch because we still moving up. That's why I say 2,500 is very ideal. The thing is, by the time price gets up here and revisit these areas, you're not thinking sell. I want to really brainwash you with that. You're not thinking sell. All right. So now that we here, all right. So we broke structure right here. All right. We broke structure right there on the 15. So I'm just following price. We failed to break structure right here. So because there's my low, there's a low. All right. So now I'm creating a series of what? A series of higher lows. So I'm taking a low. You can technically go here with a high because there's the high right there. All right. We came to the 0.5. We didn't get it. Now I'm going here. Boom. I didn't get it. Right. I didn't get it. Even though we broke structure. Right. So if I wanted to play it safe, better safe than sorry, I'm waiting for price to come down here. That gives me that 24.20 level. I'm only 200 pips away. We know a drop can happen easily. Take out that sell side right there, right? And then I'm about my business. But the fact that we supporting off this 382, we could potentially see prices deviate into our levels right here. Right? So by you doing your homework here, there's your range right here, range of motion. You don't need to do anything else. Not saying that none of this matters to the left, right? You can even get rid of that. I don't even know where I got that from. But you got to realize you're still operating in a 0.618, 0.7 amongst your weekly and daily, right? This is just showing you an overall range right here. Now, mind you, situations like this, we talked about it, right? This high, this this low, this high, right? We can still potentially come back down in here, as we mentioned, at 23, I would say 23.8. Well, basically 85 to 94. We ain't gotta be precise on the this is about midpoint though. This 0.7 is about 23.91, right? But you can still go 85 to 95, 100 pip range and kind of map it out based on your risk. But this is the thing. If we come down here, look, there's a low right there, right? So we will only want to see a wick in closing above here because if we close within here, we can see it opening up, reject off the 618, or even come back up here, reject off the 382, and then we can see movement down. But I'm seeing potential move up. So other than that, any questions? Y'all learned something today? Yeah, you called the whole move. Hey, no doubt, man. So y'all take what y'all can, implement, um, and just wait, bro. Patience, bro. Patience. I ain't gonna talk y'all head off. You know what I'm saying? So my thing is the best practice show. You see, I got crypto booming too. Let's talk about it. Bitcoin. I'm saying I got crypto booming too. I made a burner account for Twitter, yo. So I'm gonna be going crazy with my Twitter for crypto only though. I made a burner account so nobody would never know who I am. But yeah, so same thing with crypto. It worked out. All these levels you see, 0.618, point 0.7, bro. And it's mapping out so perfectly that I won't trade another way. Win, lose, or draw. I won't trade another way. So if you investing in crypto, my thing is play it smart. Like one of my crypto mentors told me, position yourself to buy it weekly and walk away from it. I mean, whatever coins you decide, of course, the stable coins you wanna respect, and a lot of pump and dump still out there, but play it safe on your risk management with trading crypto because we know that volatility. I'm gonna show y'all where I see Bitcoin coming to, and I dropped it. It's my monthly. I see here, 0.618, but I'm still respecting Tetris too, though. So I'm kind of seeing around this area, primarily here first, get some movement back up, but then I'm seeing here. All right. So we ain't gonna get into detail about that. We gonna stay focused with our day trading. But stay diligent, man. Stay on the higher time frames. I'm gonna enjoy my birthday, bro. I ain't doing much today. You see, I'm with y'all. I got another call at 1 o'clock. Like chilling, bro. Chilling, man. I'm saying we want to make sure the paper good. Learning more and more, especially with the fibs. Got you, bro. Like I said, what I'm bringing to the table for y'all, you may never need my mentorship, right? But I'm always gonna encourage you the mentorship. Like I said, 1-on-one with me, 29.88 for 12 days, 648 for 6 days. If you just want to have a 1-on-one with me in general, hour and a half, $300. Like, don't see it as a liability. See it as an investment because I even have a student who's in. I don't know if he's on this call. Let me see if he's on this call. I ain't gonna call him out. I just want to see if he's on the call. Let me see. You up here, bro? Let me see. He ain't up here right now. So he's investing in a group mentorship and he's investing in a one-on-one mentorship. And he's getting the same value in both, but he sees the long-term picture, not the short-term gain, right? Because the thing is, even with the 12-day mentorship, 6 days, it's on me. The next 6 days, it's on you. Meaning, I'm gonna show you every and anything. First 6 days, you just taking notes, copying and pasting, do what you need to do. This next 6 days, you teaching me. You teaching me. Evelyn, I'm gonna drop the links in the chat. Um, but if you ready, come on. But like I said, this is by choice, never force. I have people in here who've never been through my mentorship, profitable, right? And I have people who have went through my mentorship, profitable. I have people who went through my mentorship, not profitable. Because I can't say they put the work in or not, but I know who puts in the work or not because it shows, right? And the thing is, you now have somebody in your corner. Hey, I had a question about this, a little confused about that. How can I da 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 da? And 9 out of 10, it's nothing but a therapy session. And I don't say that with like uh any um disgrace or diminishing aspect, but it's all mental at the end of the day. And we're bouncing ideas on from one another, right? That's why I love teaching, yo. Signals, like I tell people, signals, tell you, the signals is nothing. Hold on, nah, it's Mel. Oh, he said visiting my mom's and couldn't miss up. I got you, bro. I got you, Mel. I got you, Mel. My bad. But the signals, bro, they layups, bro. And the value is still there for in the single chat note. I love them with my heart, biggest heart ever. But the value that I give in my teaching will never be placed into a signal, right? It will never be placed into a signal because I'm only giving you what my outlook is on price. And then you're probably questioning like, okay, where's the analysis behind this? Like he just calling random prices. Like, I don't even know if I should take this. Exactly. Come see why I'm taking it. All right. So outside of that, guys, if you want the mentorship, hit me up. I'm gonna drop the links again in the chat. I'm gonna drop this video probably within the next 10 minutes so you guys can have it to study for the weekend. It's been a great, 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 great morning with you guys. Take care. I'll see you soon.